The market stats came out for July 2024, and it was an interesting month to say the very least. Let's break down where things are looking for detached, semi-detached, rows and towns, and condos here in the city of Toronto, because the market stats may actually be surprising for each and every one of those markets. I'm Michael Ouzas. I'm a realtor here in the city of Toronto. If you ever want to book in a call with me to discuss what exactly is happening on the ground level in the city, especially in the micro markets where you're looking to either get some more information or even just see what's going on in those specific pockets, you can click on that first link in the description down below. Anytime these market stats come out, we are seeing more and more news articles come out to basically break down any narrative they wish to portray in the Toronto real estate market. As we go through this data, we will decipher what exactly is happening. And what's so interesting is that every single type of property and every micro market is performing extremely differently. This is where we're going to start. And the reason we're starting here is because this is what paints the entire picture of what's going on in the Toronto real estate market. July of 2024 had less sales than June of 2024. However, it had more sales than July of 2023. That is a lot to unpack. And as mentioned before, this narrative could be different no matter which way you want to spin it. That being said, the number of sales over July of 2023 was only about 141. So not a ton of sales above last year. And if we remember July 2023, we actually had a rate increase in June and July, which really put a big halt on the market. So this July of 2024, not exactly one of the hottest markets going. More notably though, is we have almost 24,000 active listings by the end of July, which is a significant amount over July of 2023 and about on par with June of 2024. Over 4.4 months of inventory, which puts us well into a balanced market across the board for the city of Toronto. This time last year, we had just under 3 months of inventory, which is still very much more of a seller's market. And that increased up to 4 heading into September. So now that we're at 4.4 in July, it'll remain to be seen what happens in August. And we have already started to see some properties pull off the market here in August. So I'm curious to see if they'll come back in September or if they'll just rent themselves out or maybe not come back to the market at all. One notable thing is that pricing is down from June about $60,000, which is quite a big drop in pricing. It is also down about $18,000 from last year. So not a huge drop from where things were last year. And if August of last year of 2023 is any consideration, we may see prices pull back even a little bit more in the month of August. And in August is generally a slower month for real estate across the board, especially in the city of Toronto. So there we have it. The interest rates dropped again in July by 0.25, and analysts are calling for possibly another drop in September. That remains to be seen. Generally, what we've noticed is that if rates do drop, we typically see a price increase. However, that wasn't the case in July. The rate went down about 0.25%. However, prices also went down. The reason for this is that the Bank of Canada announcements affect the variable rates. And right now, variable rates are about a percentage higher than the fixed rates. From a buying perspective, even though the rates have dropped by another 0.25 basis points, we have not seen any relief when it comes to affordability for buyers. Buyers are typically getting approved on the fixed side right now. And as mentioned, it's about a percentage lower than where the variable rate's at. So until those numbers start to get a little bit closer in line, I don't think we'll see a huge jump in pricing because the fixed rate is where the fixed rate's at. Now, we have been hearing that the bond rate's been coming down as of late. So if that factors into lower fixed rates, we may start seeing pricing also increase with that. So where do things stand from detached, semi-detached, townhouses, and condos? Well, if you look at this chart, we are still seeing pretty decent growth from January from the detached market, though we did see a peak a couple of months ago. A detached property in the Greater Toronto area will run you somewhere around 1.4 million. Semi-detached property in the Greater Toronto area just under 1.1 million at $1,083,000, which is down from June of 2023. On the townhouse side, we are seeing $817,000 on average for Greater Toronto area, and condos hanging in there at $689,200, which is actually exactly where things were in December of 2022 to the dollar. Let's break down where things have gone through the year of 2024 since back in March. If we look at March, just over 830 listings. Now we're over 2,040, almost a 2.5 times amount of listings coming up in July. We actually saw that number drop from June. 600 of them have sold, 3.4 months of inventory. Now keep in mind, this is Toronto address. So for the entire city of Toronto, only 2,044 active listings. When you look back in March, if you really think about how many detached properties were for sale at 800, that is not very many detached properties for a population of basically 4.5 to 5 million within the Toronto limits. That 3.4 months of inventory does bring us into a more balanced territory, which is also brought pricing down from where things were March, April into June, July. Also keep in mind when we are seeing 830 active listings, 647 sales, this 1.28 months of inventory generally will bump prices higher. And as our months of inventory raises, we will see prices kind of fall off a bit as well. If we look at this semi-detached market, back in March 2024, and we spoke about this so many times on the channel, 0.7 months of inventory. So basically for every active listing, we were seeing more sales happen. So the overflow from the month before were also getting absorbed. Pricing in and around 1.3. And as mentioned just in the detached sector, as that months of inventory is tight, we do see pricing increase. And we did see that until basically June and July when the months of inventory started to hit the level 2. And now we're seeing 1.25 million for the average semi-detached home in the city of Toronto, when that number hit 1.4 back in May. What's interesting about this though is that we are seeing the same amount of active listings, however, a significant drop in sales. So about a quarter drop in sales, which really plays a factor when it comes to inventory absorption. Fast forward to townhouses, we did see a significant jump in pricing from March to May. And this could also be that the nicer townhouses started to sell in April and May, more of the spring market. That being said, we have seen a pullback in pricing as we're now at that 3.25 months of inventory. In fact, townhouses are the only sector where we saw more sales in July than we did in June with the same amount of active listings. So that's a pretty decent absorption rate, especially for the July market. At 3.25 months of inventory, that still keeps us in a balanced market. Next up, we have condos. And interestingly enough, 6,100 condos for sale is about 55% of the listings here in the city of Toronto. If we think about the active listings with the detached about 2,000, semi-detached about 400, and townhouses just over 220, that's only about 2,600 freehold properties on the market with 6,100 condos. If we add on the detached, semi-detached, and townhouses, that brings the condo market in and around the 50 to 60% range of all listings with a Toronto address. We did see 994 sales, so almost 1,000 sales, pretty similar to the month of June, with months of inventory at 6.17, which is the highest it's been all year, eclipsing June by a marginal amount. This is also factoring into pricing dropping from June to July, although not a huge percentage drop as of yet, but we have seen pricing down from May about $20,000, which $20,000 on 740, but it's about a $20,000 drop from where things were back in May. Let's take a look at the Toronto CO1 apartments, and this is super important when we think about where things have gone and where they're at. One notable number here is that the months of inventory has gone down from June to July. One thing that I do think is playing a factor into this is July 31st may have been the date that listings either expired or suspended for the time being into the summer. I will be curious to see if those condos come back to in August, but they have definitely pulled back in July, even though we didn't quite get the amount of sales and active listings about 80 less than what we saw in June. Here are the key takeaways from the July 2024 numbers. Sales were slower than June of 2024, but higher than July of 2023, which was also a pretty slow month in the city of Toronto. We have seen the highest amount of listings in the last 12 months by far. Overall, we are in a balanced market as a whole, but what does that mean for you? Well, if you're a buyer and you're looking for a condo, a townhouse, a semi-detached, or a detached property, all four of those sectors are in balanced territory, with condos being in a full-on buyer's market. So if you are a buyer going out to look at property, you may not get that same competition that you would have experienced back in March, April, and May of this year. That being said, the properties that are really well displayed and staged and in desirable areas of the city of Toronto are still performing very well, especially if they're priced well. If you're a seller, that's also important to note, because if you are looking to sell in either August or even September, getting your property ready now and really making sure that when you do hit the market, it looks and is showcased at its best is ultra important now more than ever, especially as there's more and more choice for buyers. So you're going to want to look really, really good the second you hit the market. And looking at Toronto months of inventory, detached at 3.4, semi-detached at 2.29, rows and towns at 3.25, and condos at 6.17. So that's your months of inventory, which shows that everything is in balanced territory. Love to hear your thoughts in the comments down below on if those numbers are what you were expecting or if you were expecting something a little bit different. If you ever want to book in a call to discuss what's happening in your desired micro market or in the micro market where you're considering selling, you can click on that first link in the description down below. I'm Michael Ouzas. Thanks for watching.